In this video, we're going to catch up with the latest moves in oil and gold and the levels to watch out for if you're trading these markets in the days ahead. Hello, I'm David Jones. This is the weekly video I do with Capital.com where we look at what's been happening with the price of oil and gold. These have been two very different markets over the last week. Gold has performed as expected. Oil, I think, continues to be a little bit confusing. Let's take a look at oil now, because we have seen quite a lot of volatility. There's been a couple of major things behind the oil price. First of all, the decision by OPEC to increase production of oil. Normally, that would weigh on the price, but there's also, balancing that off, there's also the threat of the US imposing sanctions on Iran's export of oil. So it's a bit of a tug of war, I think, going on with the oil price, and we're seeing that in, I think, the sort of week-on-week price movements. Let's catch up with the chart for what is, I think, still something of a confusing market. So here's our oil price daily chart. I think this is a really interesting market at the moment because we've had such a confusing couple of weeks or so. We've got the trend line here going back to September last year. The market had pushed higher, traded up here. We can see during May, its best level in years, trading above $72 a barrel. The market sold off. It looked like this trend line was sort of holding. Then we had that big move a couple of weeks ago that eventually saw oil trading as low as just above $63. And we've seen it bounce back by almost 10%. So it is quite confusing. I think, based on the daily chart. And the big question is this trend line, is this trend still intact? At the moment, I think short-term levels to watch, the obvious one to watch, are these old lows from back here, just ahead of $63. If we saw the market sell off at the time of recording, it's trading just below 68. If we saw it sell off, a deep sell-off down to here, do we see that 63 area hold? You know, that would be one place where we may be expecting the buyers to come back in. You know, we had lows here, the 5th of June, ahead of 64, and then this most recent sort of major low ahead of 63. So I think it is something of a, still I think, a wait and see market at the moment. On the balance of probabilities, and I probably have to say, well, it looks like that trend is still just about hanging on. We've broken below the trend line, yes, but we haven't taken out that major support from back here, the last major low in April. But I think it is a bit wait and see. Let's see what happens if the market has a deeper sell-off. Do we see the buyers come back in at 63? Here's the short-term chart. I think we can see the confusion in a bit more detail here. We did have the first week of June, the market trying to build a recovery, trading up to $67 and then just go crashing through those old lows at 64. But you can see how sharply it has turned around. So I think it does highlight for me just how important these sort of low 63s to 64 area is. And I think what I'd like to see happening, see the market sell off from here and see how it performs down at these levels. I just think when we look at it, we're looking at the hourly chart here over the last month, you can see just how wild I think some of the moves have been, where it goes from being in a steady recovery, then just suddenly crashing back and giving back all those gains. So I think it's maybe an interesting market to watch from the sidelines at the moment until we get a bit more clarity. So plenty of volatility, but I do think it's still a little bit wait and see when it comes to oil. You know, for me, I think maybe the more interesting outcome would be a sell-off from where we are now back towards $64, $63 a barrel. Do we see buyers come back in and that support confirmed? Well, we're going to have to wait and see. Now, let's take a look at gold. This has performed as expected. We had that break of support a couple of weeks ago in gold. The price has slid lower. So let's have a quick catch up with that latest trend. Here's our gold price chart. It's definitely been a lot more better behaved than the price of oil in terms of doing what it would be expected to do. You remember we had this break in the third week of May. Well, actually, the lows, sorry, from the third week of May, around about 1282. The market price of gold, the 14th of June, looked like it was trying to break higher, but the very next day went crashing through that old support. You know, when a market breaks a previous low, it's often the suggestion that maybe we're going to see the start of a deeper sell-off. So far, that's what we've had in gold. So last week we saw gold trade as low as what, 1261. So its lows for the year, back to levels not seen since December. So down to, what's that, a 7-month low for the price of gold. Looking at the trend, it's still down. So even though we may get the odd rally along the way, to break this trend line at the moment, the market needs to get above $1,300. Looking at the RSI down here, we've got a 14-day RSI. So over the last week or so, it's the most oversold this RSI has been since December last year, maybe even before then. So it does suggest that in the short term at least, maybe the price has got pushed down a bit too far. So we shouldn't rule out a bounce from these sort of levels, but let's not forget that trend now from those highs back here in April is still very much down. So if we do get a bounce, the expectation is for it to run out of steam and for this trend to hold. So what are we looking at in the short term? Well, I think the obvious level, let's just step it in. The obvious level is to look at this low from the 19th of June ahead of 1260. You know, a break below 1260, would suggest that downtrend is still going, and possibly the ultimate target is for a run back to these old December lows in the sort of 1240, 1250 area. But for now, the move we've seen over the last week is as expected following that break, and on the daily charts at least, the price of gold still remains pretty weak. So the price of gold still very much under pressure, and for now at least, while that trend remains down, the risk is that if we get any rallies, we are quite oversold at the moment, the risk is that we'd expect to see those run out of steam. Let's see what the next few days brings. We'll start wrapping things up there, but as usual, any questions or if you've got a different view, just leave us a message in the comments down below. If you like the video, click on the thumbs up, and every Wednesday lunchtime at 12:30, I do a live session via Facebook Live where we look at these major markets and just catch up with what's been going on and the levels to watch. The easiest way of watching this, if you're on Facebook, go to the Capital.com website, like it, and you'll get notified when we go live, and the video is available shortly after a recording of the session. To never miss out on the videos we upload here on YouTube, just make sure you're subscribed to the channel by clicking on subscribe and the alarm bell notification icon. If you click that, you get automatically notified every time we upload a new video. But for this week, for this session on gold and oil, we'll leave it there. So from me, David Jones, and Capital.com, I hope you have a good trading week.